What's going on, everyone? It is Joe Rapisarda. Today's date is Wednesday, March 18th, 2020, and this is the Rap Report reporting to you live from the bunker. I personally have gotten a kick out of hosting these Facebook Live sessions. In the past, I've really only recorded via audio and sent it to our email subscribers on the Nonconformist. I've been doing this since last August and September. But I've really gotten a kick out of being able to host these Facebook Live sessions and answer some questions some people might be having. I think I've decided that at this point, the way that the markets are moving and the way that history is evolving, I'm going to continue to post these updates here on Facebook, titling it as the Rap Report because it is so fitting. So again, my goal here is to bring you information that you can understand, and the truths that are going on in the financial markets, also the scandals that are happening in the background, and try to provide you the information to prepare yourselves and others and help preserve and grow your wealth through the upcoming and now current crisis. All right, so quickly today, what I'll do is we'll take a quick look at the markets to see where we are right now. The main topics that I want to talk about, though, is some recent events, news events that took place over the last 24 to 48 hours, including the Federal Reserve starting quantitative easing again. We've talked about that in the past, increasing their daily operations to supplying about $1 trillion per day into the economy, at least for this week, they've announced. Also, I wanted to take a quick look at a few charts comparing this event now to the Great Depression. We know that the markets have fallen enough and fast enough now where it's been worse than 07, 08. We saw last week was the worst week in the markets since the 80s, I believe with the 87 crash. So now we are now entering depressionary territory. So I wanted to talk quickly about that. Also, another significant event is related to the digital currency space. So the chief legal officer of Coinbase was just appointed by Steve Mnuchin, who is our Treasury Secretary for the United States, to oversee the banking industry and the U.S. economy. That's significant. And then also we'll close it out here with talking about currencies and when people start to lose faith in a currency in transition. But okay, let's start by looking into the markets here. And I can't share my screen through Facebook, so I will tell you what I'm seeing and what I'm reading and the source, and I'll let all of you go out and do your own information and research. Take what you hear from me as a grain of salt. I'm just passing on knowledge. Everyone should be doing their own research independently and validating what I talk about here. But all right, so it is 11:09 now. The markets are continuing to show some weakness. The Dow is down around 6%. Or 1,280 points. S&P is down around 5.56%, 140 points. So, even though the Federal Reserve announced yesterday that they are going to increase the amount of money that they print and supply to the markets, we're now seeing that that is not slowing down the sell-off. It's also important to bring up Monday's market moves. I know I talked about it probably very quickly, but I think we had a close to a 3,000 point drop. I think the 13% swing is one of the largest in history. So Monday was also slaughter. So buckle up. Markets are continuing to tumble down. In my talks in the past, I've talked about diversifying into metals, gold, silver. Right now, there's actually a shortage of silver globally. We're starting to see that more and more. If you go onto websites like APMEX, APMEX, or any type of precious metals dealers and brokers, you'll see that the price per ounce of silver and the asking price by the company, there's a large margin there. So for example, the silver right now I think is trading for around whatever $9-10 an ounce, but they'll still be asking around $25 an ounce. That spread that you're seeing, I believe, is because of the actual shortage of physical silver around the globe right now. I had known a few months back in Mexico. Mexico is one of the largest producers and miners of silver, but no one could find physical metals at all. So we're now starting to see a supply shock in the metals markets. So, obviously continue to look into metals. At this point, a lot of people probably taking a hit on their 401ks. I've even heard from individuals that they have not been able to log into their retirement accounts to change their allocations. So this is something that's new. We could be seeing that because, the banking sector doesn't want people switching a lot of stuff around right now. There's a lot of chaos going on. So again, it might be a good time to consider safer investments if you haven't already. So the Fed announced yesterday that we already know that they've dropped the interest rate to 0. And I'm going to read you an article that was posted, a snippet from an article posted yesterday. It says the Federal Reserve's ongoing efforts to keep money flowing to banks through short-term exchanges will last for at least the rest of the week, meaning this week. The New York Fed, in an announcement Tuesday afternoon, said it will now conduct daily repo operations of $500 billion through Friday, which each running from 1:30 p.m. to 1:45 p.m. Repos involve banks submitting high-quality collateral like treasuries in exchange for reserves from the Fed. Banks then use the money to fund their short-term operations. So it's important. So let's take a step back, right? So I just read that article. We hear that the Fed is going to increase its daily repo operations of $500 billion through Friday. What is repo? What are the repo markets? Repos are repurchase agreements, and essentially how this works is every bank in the U.S. right now works off what's called fractional reserve banking. What fractional reserve banking means is that their banks are only required to keep a fraction on reserve of what they hold in all deposits at a branch at one time. So when you go down the street to your local Webster or Bank of America or whatever your bank is, on hand in physical cash, there's only roughly 10%, I believe around 10% of physical cash there. The rest isn't held at the banks. And that's because what the banks do is they take your money and then they make loans and then they extend credit. So if all of us were to go to the bank down the street now and try to withdraw the money that we had in our account, it wouldn't exist. That's what's called a bank run. That has happened in history. Now, the way that banks are able to ensure that they have enough of that required cash on hand is by lending to each other overnight. This happens after hours when banks are closed. And a lot of these are done through repurchase agreements. And last September, the interest of these loans happening overnight increased quite a bit. And it increased enough in the interest rate where people weren't loaning, banks were not loaning to each other in the overnight markets. And the Fed had to step in last September and start printing money to supply to the overnight lending market, the repo market. Now, we still don't know why this is, and a lot of it's kept behind closed doors, which is why we don't know. But there are thoughts that it could have been because somewhere in the system there's a bank that's insolvent. There's clearly some mistrust going on, so people and banks are not lending to each other overnight, and the insolvency issue seems to be what might be the biggest problem. So the Federal Reserve has technically started quantitative easing again since last September. They say they just started it now today, but we know that they've been supplying the repo markets with freshly printed money since last September. This is significant, this news, because they're increasing it by quite a large margin. So the $500 billion we're seeing during the day, and then the $500 billion I think they're supplying overnight, equates to about $1 trillion of money being added to the U.S., the current money supply now every day until at least Friday. So that means we're looking at, $4 trillion plus being added to the circulating supply of all U.S. dollars in the world in 1 week. This is important for you to understand because your money is being devalued right in front of you. It's the same reason why, the money back in 1970 or 1980 was worth more than it is today. A lot of that has to do with simple mathematics, and it wasn't devalued as much. So the circulating supply of dollars then was less than it is today. We also know that after the 07-08 housing crisis, the Fed supplied, I believe it was around, in total, when all was said and done, $17 trillion of freshly printed money to the market and to banks. So now we're just continuing to see our currency devalued even more through inflation. So what does this mean going forward with the Fed? This means that, the printing press has started again. They're adding about $1 trillion a day to the money supply, and your dollars are being devalued in front of you. So your dollars today are worth less than they were yesterday. And I'll expect that this will continue to happen as this crisis continues to unfold. All right, the next thing is the comparisons right now to the Great Depression. This is something that I've been holding off from actually talking about in my videos. I've talked about how I think that this could be worse than the 07 crash, but I haven't actually come out and say that I think we're looking at something that's closer to the Great Depression. I'm now willing to openly say that. And the reason is because of the rate at which we've already seen the markets take a hit. The last 3 weeks to a month has just been absolutely devastating. The Dow Jones, I believe, taking a 25–30+% hit, falling much faster than it had from the 07 crisis. And then on top of that, you throw in the black swan event of people being home from coronavirus. So we're really only seeing people staying home at this point about a week, and where the economy stands after a week. I'm thinking forward months now. So what happens 4 months from now, 5 months from now, when people are still home? How much worse is the economy then if it's this bad and so far in this short period? So I do want to openly express now that we are talking about a much more serious event and a much more significant event going forward. So quickly, I know I can't show this, but there is great charts out there that are comparing the S&P 500 actual chart to the 1929 stock chart, which was the last Great Depression, the market crash in 1929. And it is amazing how correlated they are. And you can find this on Twitter at an account called Nautilus, Nautilus. I'll post this in the comments section, but you'll see the comparison charts there. When they overlap them, they pretty much take one chart from current day and then the chart from 1929, they put it on top of each other, and then they see where the price movements are, and they mirror each other miraculously. It's so beautiful, but it's so scary, really. And then also looking at the Dow currently right now compared to the crash in 1929. So, we do still have a ways to go, but we are still early. So it's important that you just have knowledge on this so you can help prepare yourself, prepare your family, and then also help safeguard your assets. Now, during the Depression, I believe the markets fell roughly 80%. So we're still in the early phase of this. I'm not saying that this is going to happen, but we have seen quite a dramatic drop in the meantime. One of the other things that I've heard from people too is that, well, the markets have had the best days over the last week or so too. Like last Friday, I think the market ended the highest it ever had, up 5 or 6%. And then yesterday actually was much better. But what people don't know is that historically, the last time that we have seen those bounce backs, those historical bounce backs in the middle of this, was during the Great Depression. This is a tweet that I'm reading from an account called Pomp. It's at A Pompliano, Pompliano. Anthony Pompliano is a pretty large figure in the Bitcoin space, but he just brought to light some good research here. And he says the S&P 500 has swung 4% or more for seven consecutive sessions. So that means the S&P 500 has gone up or down or more than 4% 7 times ever. And the previously recorded 6 consecutive sessions was in 1929. So it was during the actual crash. That's what we typically see here, is that, the markets will go down, they'll have a little bit of a bounce up as a correction, then they'll continue their movement down. So what we're looking at is, if you're looking at a chart, just expand it out. And what we want to see for a recovery is, an actual plateau, consolidation, and then we want to see higher highs in the charts. But we're not seeing that right now. which is just validating that, there's a little bit more hurt to come. We might not be seeing this now around society. People are very focused on the coronavirus. We know that some people are losing their jobs. And, we understand that this crash is bad right now, but just like after the 29 crash, it's the years that follow that you typically see a lot of the actual true effects of the economy from there. I'm just letting my audience know this because you're not going to see these chart comparisons on CNBC. And if you're just watching the nightly news at night, you're not getting a full scope of what's actually going on from a larger picture. This is nothing to scare anyone. It's not right or wrong. These are just the facts that are in front of us. Some people might be asking again, well, what can I do during this situation? You might not have much choice here. I know that it can be very difficult for people to, buy assets, buy investments if they don't really have that much money in general. Your employers might not be allowing you to reallocate your 401ks or anything like that, and that's okay. But by you watching and having awareness on what's going on from a broader scale, you at least know what's going on, so you can make more informed decisions once the time comes. So that's where we are as far as the S&P. Just quickly check my notes here. We're at 16 minutes. I'm going to try to keep these under 20 minutes, 20, 25 minutes. The next event then that is important to talk about, this news actually just broke, I believe, overnight here. So this was an article posted by the Daily Hodl, HODL. You can also Google this and you'll probably find some new updates by other journalists. But on March 16th, which was yesterday, the U.S. Treasury Secretary Steve Mnuchin appointed a Coinbase chief legal officer to oversee the banking system. Now, this is very significant. This is so people know Steve Mnuchin is the Treasury Secretary of the United States. So he's the head of the Treasury, right? Treasury oversees fiscal policy, so they manage jobs and they pull in taxes and they do all this other stuff. That individual, Steve Mnuchin, just appointed the chief legal officer, so the head of the legal department of Coinbase. Coinbase is one of the largest cryptocurrency exchanges in the United States. So Steve Mnuchin just hired the legal executive of one of the largest crypto exchanges in the U.S. to be the head of the entire banking system in the United States. He's going to overrun it, the CLO from Coinbase. That is very exciting in the digital currency space because now we're starting to see the theory play out where we could be either introducing Bitcoin or digital currencies into the U.S. financial system, or we could be looking at maybe the future transition of a currency or a store of value. Now, I'm completely speculating on that. I don't have any further information in this news article, but over the last 2 years or so, I have been formulating this hypothesis that we are transitioning off of the current reserve currency and financial system into what will become the new currency and a new financial system, and Bitcoin being a part of that future. Now that Coinbase is involved with the U.S. government, it's just validating that even more. So we'll have more news to come on what that actually means going forward. It could mean nothing, but we could be seeing Bitcoin used or other digital currencies used as collateral now during this market crash. Because remember, we're having a currency crisis on top of it. So at some point, the U.S. is either going to have to hold gold or Bitcoin or some alternative, even to hedge against its own dollar. We're also seeing some updates on, not bank runs at this point, but I had heard that Bank of America, I think, is withdrawing. They're limiting withdrawals out of bank accounts at $3,000. I had seen a few updates of people experiencing cash shortages in Europe right now. So, this could be something else that we see going forward as a bank run. Again, remember fractional reserve banking. the way it works is that once people in society realize that the money that they see on their screens isn't really physically there at the bank, they get a little freaked out, and then they try to go take all that cash out at once. And that usually causes, a bank run, because the bank can't provide all the cash to people. Historically, this also happened just before the actual Federal Reserve Act was passed in 1913. In the early 1900s, there was a large bank run, but back then it was for their gold and silver and precious metals. So the way that banks really started is they became a place where you could deposit your physical gold, because you didn't want to carry it on horseback all the way across the country, and they would give you a receipt for that gold that was there. So then when you showed up back, you came from your horseback trip across the country, you handed the receipt to the banker then could give you the gold that you were that was rightfully yours, that you had left there. But in the early 1900s, what had happened was there was a lot of fear going on, and people were running to the banks to withdraw all of their metals. They were handing their receipts back to tellers. I want my metals back. And little did they know that the bankers in the background were actually extending loans based off of that metal, and the people's metals were not actually there. So it was a big thing. It really destabilized society for a while. And then that fear mongering afterwards is actually what ended up leading to the Federal Reserve Act in 1913. So that's just a small history on bank runs. I don't think that's happening here in the United States yet, but we could see it going forward if people are worried that the banks are going to close down, or the banks aren't going to have their money for them. The last thing during today's talk I wanted to bring up and discuss is the psychology around currencies, and when do people actually rotate and shift off currencies. Now, we know in history, looking back the past 1,000 years, reserve currencies have changed every 80 to 120 or so years, roughly. There have been existing world powers, which typically control the reserve currency, and those world powers have changed every 80 to 120 or so years. So the US dollar is not, for us, we're used to it being the only currency, but in history, there's been many reserve currencies that have existed. We're nearing, at least a lot of the evidence shows that we're nearing about the end of where the US would stand as a reserve currency status. And we're seeing that right now with the oil wars. Oil is sold and traded in the dollar, 100% of it at the end of the day. And now, because of the pricing going on between Russia, Saudi Arabia, and Iran, we're seeing the potential of a shift of what people buy oil for, or what currency they buy oil with. That could be a struggle. But ultimately, though, what currency comes down to is really psychology. Do I believe, or does the nation as a whole collectively believe that this currency actually has value? The psychology is the biggest element of it. And typically when people they start to really lose faith in the structure or the currency as a value, they will then switch to the next alternative that they perceive to have more value. This has been experienced in recent years. I believe less than 10 years ago in Nigeria. I think it was in Nigeria. I'll fact check myself. But the country's currency was going through inflation, and the money wasn't really worth anything anymore to the people, but cell phone minutes were. So people in the area had Nokia cell phones, and they all worked off prepaid minutes. And there was a collective agreement that these cell phone minutes were worth more than the actual physical currency. And what store owners and shops started doing is they started accepting cell phone minutes for payments instead of actual currency, government issued currency. These cell phone minutes can be texted to each other just like a Venmo payment, and that then became the actual currency of that market and that economy. We've also seen this from friends of mine that have been incarcerated within the actual prison systems. New forms of currency among the population, bags of rice, things like that you're bartering with each other. So we're really entering this very interesting period where, the dollar is threatened. It's in the 10th inning of a 9-inning game, really, of its existence historically. And we're experiencing, the Federal Reserve now starting to print trillions of dollars every day, and the currencies now could potentially be going through inflation. So my interests lie with watching this play out and watching the social experiment take place, where people start moving to alternative forms of value and moving to alternative forms of currency that they decide they want to spend and save in. I don't know where this goes yet. We will see. It really all depends on what happens with the dollar going forward for money printing. I think this is also why you're seeing a lot of helicopter money being offered now. So, you know, the President Trump now talking about sending everyone $1,000 a month. Little did we think that a Republican would be saying that months ago, because that was always considered a socialist thing. You know, you get free handouts and you're giving away universal basic income, but you're noticing that they're very open to it now. I have the belief it's because that they know that rates are at zero, probably going negative soon. They know that the current money supply is going to have to go through inflation. There's going to be a lot of money printed. And if you're going to do that, you might as well just give social handouts as well. So, you know, I hope that the people that need that money get it. But that is the updates on today's information and news for you. If you are liking what you hear, if you have any questions, leave them in the comments section. I'll be sure to get them updated next time around. You know, again, hold on tight, hug your loved ones, you know, try to do some self-meditation. If you can kind of diversify some of your assets, go defensive like we've talked about, metals, certain bonds. I'm not a financial advisor. I can't advise you on any of that. That's what I've done in the past. And, you know, just love each other. It's in times it's in times like these that we're going to be reminded how important community is and how important it is to actually care for one another. And it's important that we do that going forward, because we should be anyways. But, you know, consider this a reminder that we need to really care and look out for each other. All right, that's it. Thanks for tuning in to today's edition of the Wrap Report, and I'll talk to you guys soon. Bye-bye.